So I'm sure we all know what
Welcome back. You're watching Indian Open right here on BloombergQuint Live. Today, the markets look a bit soft. A slight bit of a give back across the board. In Asia, too, we're trading slightly under. So you've got a 0.5% cut on Hang Seng, which is down about 160 odd points. Nikkei is flat, and so is Shanghai. For the SGX Nifty, too, an extremely flat day of trade, at least at the start of it. No cues to take away from our equity market open, though yesterday's session saw the Nifty closing above its shorter-term 50-day moving average, and the journey from taking support at its 200-day moving average to the breach of the 50-day moving average on the top was covered in just 4 trading sessions. Good morning, Neeraj.
Morning, Devina. Well, let's wait and watch what happens in the session today. The globe has been supportive, so we should have a good move any which ways. I mean, we shouldn't have a bad move, let's put it that way, unless things materially destabilize. But just the fact that the last few days have shown that for either quality paper or quality earnings or for quality news, there is enough and more market reaction that happens, as we saw with NBFCs yesterday, as we've seen with Avenue Supermarts, as we've seen with Bajaj Finance.
Yep, new highs day after day for that one. Also, the fact that yesterday's session, particularly on the Nifty Bank, was not supported by the 2 big heavyweights. So you had HDFC Bank and Kotak Mahindra Bank missing from the action, while the rest of the pack led the rally. So you had Bank of Baroda, Punjab National Bank, RBL Bank, all of these stocks, SBI, all of them taking them higher in the session, but not Kotak Mahindra Bank and HDFC Bank. So let's see what happens in today's session. Also important to take a look at how the expiry of the the weekly options happened and what's the setup then for today. Navneet is joining us for that. Navneet, good morning.
Good morning to both of you. Well, it's been a strong rebound for our markets, but still, at least if you look at the futures, the index futures, we've not seen any meaningful short covering bounce coming by. The reason being the open interest unwinding has not taken place in the last 4 trading session. For Nifty futures, I think this was the 5th straight session when they're closing at a discount, and this has been the reason we are waiting for that short squeeze, which is not coming by. And of course, as you guys highlighted, we crossed both 20 and 50 DMA, so we are now trading above all the key moving averages for Nifty. And in today's trading session for Nifty Bank, I think we should be eyeing for the 50 DMA, which is placed somewhere about 31,570. At least for Nifty Bank futures, there was open interest addition of about 6% seen. Volatility has cooled off from those 17.5 levels of last week to now 13.7. It was down about 3% in yesterday's session. We've rebounded nearly 4% now for the week. On the put call ratio, of course, that's been inching higher on back of higher put writing, which has come back into the system this week. So 1.48 was the closing versus 1.38 of last week. In terms of distribution now for next Thursday expiry, which is scheduled on February 13, in terms of maximum open interest in the put side is at the 12,000 strike, while on the call side it is at the 12,200 level. And of course, in today's session, traders will be watching out for 12,200 on the upside. There was both put as well as call writing seen yesterday. So as you can see, 12,100, we took out that mark, but there was addition coming in for both 12,100 call as well as put. But the 12,000 put strike had seen a lot of aggressive writing, and also the 12,200 call writers were quite active in yesterday's session. Very quickly then, moving on to the stock futures, there were a lot of stocks which were moving around. Hero will react to its earnings today. Ahead of that, there was some fresh long positions seen, and Aisha reacted quite positively to the numbers. Open interest was up, fresh long positions were seen. RBL, the stock did see some bit of bounce back. There was some short covering bounce seen there, and L&T Financial Services, which was active in yesterday's trade, also witnessed short covering bounce. With that, it's back to you guys.
Right, Navneet, thanks very much for that. So that's something that you need to keep an eye out on. Also, the Monetary Policy Committee on Thursday gave banks some leeway on loans extended to commercial real estate projects, provided that the delay is due to unforeseeable circumstances. The impact was seen on NBFC stocks, which staged a strong rally in yesterday's trade. Let's discuss the implications of this move with Siddhartha, research analyst at SMC Institutional Equities. Siddhartha, your first take on this move? Obviously, this seems to be a more dovish commentary that has started to come out with regards to even the fact that even though there was a status quo on the rate cuts, the RBI said that we are there to make sure that we can take pervasive measures to make sure that growth continues to go on the right track. And they've been doing that with all these measures. What's your take on what they did for commercial real estate?
Yeah, absolutely. In fact, if you look at the headline, policy, then certainly there was no change in rates. But the indirectly, what RBI has done is that they have given a big relief to the real estate sector, which can flow in eventually in the form of better liquidity right now. So what they have eventually done is, I'll tell you in simple ways, that earlier real estate companies we know are facing liquidity crunch, and they were not able to complete their project. And once if they are tagged as NPA by any means, whether it is some issues which was operational issues, some clearance, or maybe anything, then once if it is tagged as NPA, then normally they are not able to get fresh funds from any banks, NBFC, or from any other source. Now what the Reserve Bank has done is that they have extended the commercial date of operations for 1 year. So that means real estate players which are genuinely stuck up in some projects and are not able to complete, they will not be tagged as NPA by NBFC and banks, and they will get the new lifeline of credit. So they will be in a position to now complete the project instead of worrying about repayment. So that solves the problem of completing the project and also solves the problem of NBFC and banks also of that account not turning into NPO. So this was the one demand where everybody already had been talking for quite some time that there should be a special package for NBFC. So it's not a special package, but definitely a big measure that and normally why it is important, I'll tell you that normally once the commercial date of operation is announced, then all your repayment is supposed to start or they are supposed to start repaying. So if your extension is given, so the amount of money that you are generating, that also you can use for completing the project. So certainly positive from that point of view. So big relief for NBFC players who have lent to real estate sectors.
Right.
So yeah.
So that the other point being is this is specific to commercial real estate. Now, yesterday we spoke to Mr. Hiranandani, and he was of the opinion that instead of just focusing on commercial real estate, it should have been something that could have been extended to real estate as a whole, even to housing for that matter, because that is where much of the stress lies. Do you feel in comparison this is a step which is in the right direction, but too pointed in nature towards a segment which may not require that kind of relief?
No, if you look at the inventory, then obviously if the builder is given kind of some relief, then naturally the builder will get additional fund to complete the project, and banks will be also willing to or maybe buy the assets pool of some NBFC. So indirectly they also get funding. So they will get certainly time and money to complete the project. So, I think then both the sectors get some benefit. And already we are seeing some amount of liquidity easing. And see, the problem here was not about the rate of interest for builders. It was about the completed projects only that they were getting sold. So once projects get completed, you will naturally see buyers turning in. And that will help the real estate sector and NBFC in turn. That's why we saw a big move yesterday in NBFC.
Siddhartha, that's my question really. Which of the NBFCs within your coverage stand to benefit the most out of all the moves that happened yesterday?
See, I don't have a buy rating, but it's not a recommendation to buy. But the most beneficial companies will be certainly Piramal Enterprise, who have a large exposure to real estate developers. And then L&T L&T Finance Holdings. Certainly, we knew that they had certain assets which were facing trouble in the real estate sector. They will benefit, and definitely even to some extent banks also. Banks like IndianOpen, which had a sizable builder portfolio, and that was one of the big concerns. So we should not neglect banks just by focusing on NBFC. So banks like IndianOpen also should benefit out of it. So NBFCs, as I said, Piramal and L&T Finance and IndianOpen, I feel should benefit most.
Okay, just one last question. This CRR relaxation translates into what? 15-20 basis points gains for almost all banks because of the incremental lending to housing, auto and MSME segments?
Yes, it's difficult to calculate, but roughly it should be 15-20 basis points, not more than that. But what it indicates, I'll tell you, Neeraj, that it's message that the RBI is giving, that we want to create a sentiment that the retail demand should pick up. That's what they are like. It will not necessarily mean a very big improvement in ROE for banks, but RBI is in turn trying to kind of give a message that you can go ahead and lend to all this sector for reviving the growth. So certainly, obviously, positive for banks also from that point of view also.
Okay. Siddhartha, thanks very much for joining us. Really appreciate you taking out the time this morning with your thoughts. So watch out for some of those NBFCs, Piramal, L&T Finance, all of these names will be in focus in today's session as well. Yesterday's session saw them moving up by about 7.5%. Siddhartha Khemka, Vice President and Head of Research at Motilal Oswal Financial Services, is also joining us right now on the show. Siddhartha, let me get your sense of the measures taken yesterday, not just on the policy side, but also the fact that the additional boost to make sure that there is credit flow, there's good transmission of the excess liquidity that is any which way is there in the system by the RBI, and how positive is it? Like we just spoke to Siddhartha Purohit.
Yeah, good morning. So the market has taken it very positively. So the RBI in a way is looking at some of the other measures to boost the credit flow into the system. So they have already taken the 135 basis points rate cut throughout last year, and now they are looking at ways and means to look specifically into segments where the credit flow is being difficult. This was something which was expected, that the government in the budget could provide some relief or measures for something like a real estate and MSME segment, but somehow that is now being given by the RBI. So definitely a very positive welcome move from the market perspective, that the RBI is giving some relaxation to the banks and NBFCs in terms of the specific credit flows towards SMEs, towards the real estate sector, auto sector, which should lead to some kind of transmission of the rate cut, and as well as improve the credit flows towards these sectors.
Okay. Siddhartha, good morning. Neeraj here. Let's talk about some of the results that came out as well. And I want to start off with Hero MotoCorp because the numbers optically seem okay. What has been your call in the morning meet today about the Hero numbers? And within the two-wheeler space then, what would the larger call be? Because Eicher Motors too reacted very positively to the small, slightly better than expected performance, if you can call it that.
Yeah, good morning, Neeraj. So if you look at the two-wheeler numbers, Hero Moto numbers looks good. They have reported, so while the headline numbers were lower, it is in line with expectation. The margin improvement is certainly on a positive surprise, and on back of that, the tax benefit has led to a higher than expected net profit growth. Overall, if you look at even from Eicher Motors numbers, it was again nothing great sort of numbers, in line with expectations, marginally better, as you said, in terms of overall net profitability. If you look at the commentaries, now we are seeing, and even if you look at the Hero Moto commentary after the con call, they said that the demand from the rural side is improving, and on back of that, they are expecting the second half to be much better. In this environment, if you look at from the space that they are coming from, even a marginal improvement in demand definitely is a very positive factor for some of these companies which are trading at a very attractive valuations from a long term, if you compare it with their long term averages. So having said that, there is a big overhang for the sector, which is the transition from BS4 to BS6. Where the challenge of clearing out the old inventories, coming out with the new models where the pricing will be higher, about 10 to 15%, and the acceptance of that will need to be seen how at least on the mass segment, how easily they are able to pass on the price hikes of the BS6. So just to summarize on this overall thing, we believe that Eicher Motors is best placed to transition from a BS4 to BS6, given its presence in the niche premium segment where the price hikes could be easily passed on, while there could be some challenges in the near term for some of the mass market players like a Hero or a Bajaj, where the growth will pick up towards the end of the second half of the next fiscal. Hence, we are positive in the two-wheeler side on Eicher Motors in the current environment.
Okay. Siddhartha, lots more to talk to you about and get your sense as to what you think a Britannia and a UPL can also do. But before that, let's get in a sense of what the street is expecting out of the numbers of Britannia and UPL, and also some numbers that came out post-market as yesterday and how it's expected to do as we kickstart trade this morning. So we've got Samit, Agam and Yash joining in. Samit, let's start off with you first and some results that came up post-market as.
Well, I'll start off with NMDC. The results were largely in line with the analyst estimates. The revenues were down 17%, net profit came in lower by 13%, EBITDA declined 26%, average sales realization were down 14%, but the numbers adjusting for the Donimalai mine shutdown was in line with what the analysts were expecting, and there was a growth which was positive for NMDC. Aurobindo Pharma, the results were largely in line. Revenues were up 12%, net profit came in down by nearly 1%, EBITDA was higher by 11%. Now, increase in other expenditures and employee cost was largely offset by higher gross margins. Profits were impacted by higher tax expense, and that's the reason the net profit was down 1%. Indraprastha Gas results were in line with analyst estimates. The revenues were up 10%, net profit was higher by 43%, EBITDA was higher by 23% because the company did not pass on the entire benefit of lower domestic gas prices and lower spot LNG prices. On the volume side, if you see, the CNG volumes were up 9%, PNG sales volume were up 18%, taking the total sales volume higher by 13% for IGL. Bata India, the revenues were up 6.5%, net profit was higher by 15%, EBITDA was up 61% compared to last year. Now, the wholesale business channel contributed significantly in the robust growth in this quarter, while the quarter was also aided by innovation, channel expansion and distribution business and the franchise expansion. United Breweries, the revenues were flat compared to last year, net profit was down by 2%, EBITDA declined by nearly 11% on the back of higher raw material costs and higher employee costs. Now, Goldman Sachs has estimated the volume growth to be around a decline of nearly 4% as against their expectations of 3% growth, and management has indicated that volume growth in Andhra Pradesh has been significantly impacted, because of which there could be a volume decline of 4% according to Goldman Sachs. In other stocks to watch, firstly Wipro, because they have won a multi-year strategic IT deal from Marelli, which is a global tier 1 automotive technology supplier, and secondly Bharti Airtel, where Department of Telecommunications has approved the merger of the consumer mobile operations of Tata Group with Bharti Airtel. Now, they have received this approval after 2 years of announcement. After 2 years they had made this announcement, and in October 2017, if you remember, the Tata Group had announced that it would sell its consumer mobile business to Bharti Airtel on a debt-free, cash-free basis, except for some marginal debt that Bharti Airtel Group would be taking up.
All right, watching out for all of those names. Britannia reporting numbers today, what's expected?
Well, no fireworks, but it could be a steady quarter coming in. We're likely to see about 6.6% growth in the top line. EBITDA margins expected to remain flattish, not expand substantially at around 16%. Net profits likely to grow around 21% on a year-on-year basis at around 362 odd crores. Now, the company does not report volumes, but the street is estimating volumes growth of around 4% in terms of biscuits. There are a lot of product innovations that the company has brought forward, and that's likely to aid growth going in as far as this quarter is concerned. Gross margins, however, are expected to remain under pressure because of an increase in milk, wheat and sugar prices. But that said, we're also watching out for updates from as far as distribution of the company is concerned, specifically in North India, where it is facing stiff competition from regional players. That said, we're keeping an eye on some of these earnings, which should be steady overall.
Okay, and UPL, are we going to map it to some of the other peers that reported numbers?
Mostly. So it's just like Britannia, we are expecting a steady quarter, but do remember the numbers on a year-on-year basis are not exactly comparable because of the fact that the company has started reporting Arista financials starting from the fourth quarter of last year. But taking a look at the individual numbers, and revenues are seen coming in at about 9,173 crore rupees, which does indicate a 10% plus growth even on a sequential basis, which is a big positive. EBITDA is seen higher by 85% to 1,883 crores. Margins relatively stable around the 20.5% mark, and the net profit is seen higher by 50%, closer to around 700 crore rupees. Now, the key factors to watch out for would be the core revenue growth for UPL excluding Arista, and most of the brokerages believe that could be in the range of 10 to 13% on a year-on-year basis. What's going to drive this growth is India as well as the Latin America business, where most of the analysts believe that we could see a higher double-digit kind of a growth, somewhere in the range of 10 to 15% decent as well for these geographies. But what's not expected to do well is North America, Europe, as well as the rest of the world, especially North America and Europe, where most brokerages believe that we could even see a negative growth this time around. And because of that, we are likely to see that margins are likely to remain subdued, because remember, North America and Europe, these are the high margin geographies for the company, and because we are expected to see a subdued performance over there, it will have a negative bearing as far as the margins are concerned. No benefit as far as the currency impact is also seen on the overall financials, but apart from that, the street would be watching out for any commentary with respect to new launches and the share of branded products to its overall revenue.
All right, Yash, thanks very much for that. Siddhartha, a quick comment from you on what you expect Britannia. What's your own estimates of Britannia in terms of keeping in mind how the volume growth for the industry has been?
Yeah, if you look at the overall consumer pack, after almost 8 quarters of consistent growth, Q2 was the first quarter where you had seen the rural growth slipping below the urban growth. And on back of that, there is some kind of cost inflation with agri-related inputs, which is also impacting the consumer segment. So we have seen some of the results already coming out from the consumer pack, and from that perspective, you don't expect a big bang numbers from Britannia as well. So overall, if you see our numbers for Britannia, we are expecting about 8% sales growth. That would be backed by about 4% of volume growth in the core business. And as I said, there would be some gross margin contraction due to agri commodity related inflation that is impacting the numbers. Otherwise, it would be largely flattish kind of for margin. And so the key thing to be watch out for again is that the commentary on the demand side, especially on the rural, how things are panning out. You will have the tax benefit again playing out, which will lead to a much higher PAT growth of about 15%. But clearly, a stable quarter for Britannia is what we are expecting.
Okay, since we are on earnings, just one quick follow-up, Siddhartha, Khemka. Did you guys have a look at the United Breweries numbers? There was a bit of a long build-up on that stock. I also want a technical perspective on that. But first, fundamentally, the stock had rallied a bit in the run-up to the results. The numbers left a bit to be desired, I thought.
Yeah, so I have not got in the entire details of the numbers yet for United Breweries, but overall I think numbers were marginally below our expectation. I think the growth is something which is not coming yet, and especially in the season time where there were some of the issues which are impacting the numbers in terms of growth, and we need to see into the greater details of the numbers to give you a clear view right now.
Got it. Keep in mind, revenues were flat. The net profit was down about 2.4% for United Breweries, and higher raw material costs and the employee costs dragged the margins, as Somit already explained. The key is the chart that you see and the run-up that the stock had in the build-up to the results, expecting that maybe the numbers will be strong. 2.5% up in trade yesterday as well. Let's see, with the market looking a bit dull today, you might well have a technical reaction on this. We'll talk about UBL with Aditya, but first, let's get him on the show and talk about the larger, broader setup. Aditya, good having you. Thanks for joining in. If the markets start off slightly iffy today, how would your index trade be?
Morning, Neeraj. After 4 days of rally, my sense is this uptrend might just fizzle out a little bit, and we might just see consolidation on the Nifty before the next leg of rally takes place. The momentum was very strong for the last 4 trading sessions. It was a broad-based buying. There's no weakness as far as the momentum is concerned. There's a minor resistance somewhere between 12,150 to about 12,170. So we might just see Nifty facing resistance, might just see resistance at those levels of 150 to about 170. So a consolidation cannot be ruled out as far as the headline index is concerned. On the downside, 12,080 will act as a good support area. So 12,080 to about 12,090 is a good support zone. I would not trade until unless Nifty crosses either 12,170 or goes down below 12,090. So if it goes below 12,090, then a short trade can be initiated for targets of 12,000, 12,020 on the downside. On the flip side, if it sustains above 12,170, I'll go for long trade for a target of 12,290 to 280 on the upside.
What about individual stocks then?
So it's from the broader market, Devina. It's been buzzing, and my sense is it will continue as the trading session goes. So McDowell's has been showing good strength. It was a big breakout post the numbers, and from there it went into a consolidation. And in trade yesterday, it's again broken out from that flag pattern. So one can look to go long on McDowell's at current levels for a target of 680 to about 700 on the upside, keeping a stop loss at 636 on the downside. The second stock is Equitas. Again, looking at the G1 charts, it broke out beautifully, and Equitas is following up the move that G1 showed. So my sense is the breakout which we have seen on Equitas will continue in the coming trading sessions. One can look to buy at current levels for a target of 120 to 125 on the upside, keeping a stop loss at 110 on the downside.
Okay. That's a recommendation coming in from Aditya. Aditya, just a few big movers then in trade yesterday on the downside as well as on the upside. So I'll come to you on the downside first. Dr. Lal, will you buy the stock at 1600?
Oh yes, Devina, I will look to buy the stock. It's been an outperformer. It's an opportunity. This correction is giving an opportunity to get in the stock somewhere between 1600 to about 1550 on the downside. These are good support levels for the stock. One should look to accumulate the stock between these the zone of 1600 to 1550 on the downside for a target of 1900 on the upside. It's an opportunity with a stop loss at 1400 to get into the stock long.
Okay, let's talk about Ajanta Pharma. The move was in the back of results coming in strong, but it was up 9% yesterday. Is there more scope?
Definitely, it's a big breakout on the charts. If I take a look at the higher time frame charts, if I move to a weekly or a monthly time frame chart, it's broken out from that consolidation after long. So it's been more than a year that the stock wasn't able to cross that mark of 1200, and in trade yesterday it's a breakout gap with which stock crossed a 1200 mark, and it's closed on very good volumes. So any correction, if you get intraday correction today because on the back of a weakness on the markets, you should look to get into the stock long somewhere between 1250 to about 1200. These are very good support zones now, which was the resistance earlier. With a target anywhere between 1500 to about 1600 on the upside, you can easily see in a matter of 1 to 2 months.
Okay. Let's also go on to a special segment, Bloomberg Edge, where Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a stock each day. Yash, good morning. What's the stock today?
Morning, Devina. So we're looking at Metropolis Healthcare, and the ADX indicator suggests that we could see further weakening in the counter as the minus DMI line that has crossed above the plus DMI line to give the negative crossover. The ADX indicator, as you know, shows you or allows you to understand the directional movement of a security as it uses its yesterday's high and low price over its previous day's high and low price in that period. How do you interpret it? Any crossover when the plus between the plus and the minus DMI line, that indicates a buy or a sell signal. Coming back to the price chart of Metropolis Healthcare, and what we saw in yesterday's day of trade is the fact that we saw a sharp correction in the counter post its third quarter results. It did recover from the lows of the day, but the ADX indicator that has given a negative signal. So the minus DMI line, which is the one in the red color, that has inched up and has crossed above the plus DMI line. The white line, which is the ADX line, that too is quoting at a mark of 36.5, which is significantly higher than the 20, which is generally what analysts as well as traders look out for in terms of understanding the relative strength of the trend. Now taking a look at the price action as well, what we saw is that around the mark of 1615 or 1600, there was a strong support for the counter. It had been trading in a sideways band, but because of the sharp correction, we saw it fall below that mark. There is a bit of a support at the 55 EMA, which is the pink line where the low of the day was also achieved, but in today's day of trade we could again see a sharp reaction on the downside, at least the ADX indicator suggests.
But do remember that you might also see an earnings reaction from Metropolis, so map the two before taking a trading call. But Yash, purely on this indicator, how has this trade worked in the past?
So Devina, 2 out of the last 4 times, and this one being the 4th one, whenever this indicator has given a negative signal, on an average the next 1 month closing returns have been closer to around 7%.
Okay, and we've got Ameera Shah, the management in Metropolis, joining us today at 9:30 a.m. So do watch out for what she has to say with regards to the growth outlook for Metropolis. Yash, thank you very much for joining in. Shubham Agarwal, CEO at Quantsapp.com, is also joining us on the show. Shubham, good morning. Let's talk about index levels now. Yesterday's session saw a breach of the 50-day moving average on the upside. More headroom left on the index?
Hi, good morning, Devina. So, if you look at the overall Nifty's placement, I think 12,200 roughly is a kind of a temporary resistance for the Nifty, and Nifty is very close to that level. And post that, we can expect a temporary pullback. So, even though the overall trend might not reverse, but I think taking any fresh trades now might have already been too late. So for people who are still holding on to the longs, my recommendation would be that they can keep a trailing stop loss at around 12,075 level on the Nifty futures. And on the upside, 12,200 to 225 is the level where they should be looking to book profits. So no fresh trade as of now, but continue to hold longs.
What about your stock-specific strategies then, Shubham?
Good morning, Neeraj. So a mixed strategy, one buy, one sell. So the first one is a buy on McDowell's, and if you look at the placement there, this one has been consolidating fairly and had nothing to do with what is happening to the overall market. And now the stock is kind of breaking out from the consolidation. So this is a sign of a premature breakout. So a 660 strike call option can be bought for a target of 27 rupees with a stop loss at 12. And the second recommendation is a sell recommendation on ITC. And we all know that there was a negative news in the budget and ITC collapsed. But the problem with the stock is that it is overowned, and that is what is not letting it push to the higher levels. And yesterday we saw that again the pullback, the temporary pullback which came, saw some sell-off coming in, and this is a sign that the downtrend might again resume. So a 210 strike put option can be bought for a target of 7 rupees with a stop loss at 1.
Yeah, interesting. Almost every strength in ITC is getting sold into. It seems like a bit of a consumption chat, but that's what the nature is today, Siddhartha. What is the house call on ITC for a long-term investor? Are these good levels to get in, or is it even possible to predict that these are good levels, good valuations right now, considering the earnings volatility that is anticipated?
And Neeraj, so I think we have had this discussion earlier on your show as well. So our house view on ITC continues to remain neutral, although valuations which were comfortable earlier have become even more attractive after the fall. But there is a big impact that the company will be taking in the core business after the excise hike. We have not yet heard of ITC raising any prices. So to that extent, there could be an impact of about 8 to 10% on the cigarette business because of the excise rise recently. The other factor is that ITC has been consistently losing market share in the core business. So that is something that has been a big overhang on this stock. The other parts of the business, that is the FMCG others, that is doing relatively better. But again, that is also, as I said earlier, that the overall consumer space Q2 numbers were weak, Q3 are not that encouraging. So the slowdown is impacting the other FMCG business where the growth is not there. Margins for the other FMCG business have improved marginally, but it is still a long way. So for me, the key long-term trigger for ITC as a stock would be the outperformance from the FMCG other business whenever it starts happening. Until then, I think the core cigarette business, which has been a cash cow, will remain a slow mover or a drag. And if at all they are looking at value unlocking through a demerger or something of that sort, that could lead to a good entry opportunity. Otherwise, it will remain lackluster is what is our house view.
Okay, a quick view, Siddharth. We are a minute away from market open. Did you have a chance to look at any of these numbers? Metropolis, IGL or Emphasis? Any one of them?
So we don't cover Metropolis, so we have not looked at it. We have had look at some of the retail companies which came out with numbers. Trent and Aditya Birla Fashion Retail, which came out with very good numbers in this environment.
Okay, how was Trent? I mean, what's the verdict now?
So we have a positive view on Trent. If you look at in this environment, the company has given a 10% same-store sales growth. The core businesses are driving the growth. So be it Westside, be it Zudio, they are all contributing positively. So we are continuing to maintain a positive view. Although the headline valuation looks expensive, we believe that the growth that the company is able to justify the premium valuation, and hence we maintain a buy rating on Trent.
Okay. Come to you on UBL. We spoke about it fundamentally. Technically, if it starts off slightly lower today or weak, what would a trade be?
I would go long, Neeraj, because it's a big breakout backed by volumes in trade yesterday. 1320, 1310 was the resistance that the stock wasn't able to cross for quite some time. It did that in trade yesterday on very good volume. So any throwback to levels of 1320 for me will be a buying opportunity for a target of 1400 to about 1440 on the upside. Stock definitely looks to be headed north from current levels. If I get any correction, I would definitely go in long.
Okay. Just under a minute left to go for market pre-open. You're also going to see whether or not yesterday's big pop on Eicher Motors continues into trade today or no. 20,300 was crossed after its inline set of numbers. Remember, on every parameter, even EBITDA margins, be it the profitability, be it the top line growth, realizations though improved a lot. So not on the back of volume, but the realizations going up from about 1.1 to 1.2 was something that the street was pretty excited about. So 22 seconds for pre-open. Asia as a pocket is still looking slightly weak. No material change from the last time that we took a check. So that's closer to 1% down for Hang Seng. You've got Shanghai, which is down about more than 0.5%, and a flattish move for Nikkei 225. The SGX Nifty also extremely flat at 12,128. Pre-open up on your screens. The first reaction, gives too much attention to the index move in the initial few moments, but obviously Hero MotoCorp, that's the first stock you're going to watch out for to see whether or not the reaction to the numbers is a positive one. And yes, it is 3% higher for Hero MotoCorp at 25.63. You've got the likes of Yes Bank, which is up about 2.5%. Wipro is up 1% as well. ONGC, Coal India, IndusInd Bank, Bajaj Auto, Eicher Motors, all of these names are doing well. Asian Paints, that's up as well, about 0.5%. Bajaj Finserv, another 1/3%. Maruti Suzuki up 1/4%. Bajaj Finance is flat. HDFC is down. HFC Limited is down about 1.33% as well. Coming to the broader market space then, and just a quick look at the currency before that, to 71.26 to the dollar is where the currency is trading at. That is slightly weaker than yesterday, but no material change. Broader market space and the bigger names to watch out for are obviously the reaction to numbers. So let me just quickly look at Emphasis, Metropolis, to see how these stocks are doing on the back of the results that were announced. Emphasis is up. PAT improved by about 7.5%. There was a revenue growth that came in as well. New deals were on the higher end, so that's doing well. Metropolis is also up, quite different from what Dr. Lal did, which disappointed the street. This one saw a correction of 6% yesterday and a bounce of about 6% in today's session. NMDC, Aurobindo Pharma, and Indraprastha Gas, all of these numbers were in line with street expectations, and you're seeing the reaction to that. Aurobindo is up about 2.8%. IGL is up about 1%. So all in all, decent pre-open start. Good morning, Navneet.
Good morning, Devina. Well, a lot of result reaction to keep an eye on, and of course the pre-opening rates are just indicating we could have a flat opening, so to say, with minor cuts coming by after the sharp rebound of nearly 4% so far that we've seen this week. But in terms of individual stocks, I also want to pull up, let's see what Jubilant is doing, at least in the pre-opening session. I believe in a strong market like yesterday, and remember this has been trading around its all-time high levels. It did fall about 4 to 4.5%. Aditya, hi, good morning to you. Would you buy something like Jubilant, which I'm sure on the charts is looking good? On any sort of correction, do you think it can be a good buy?
Morning, Navneet. No, I would not buy Jubilant Foodwork. On the flip side, I would look to short Jubilant Foodwork. There's a big negative divergence that I see on daily time frame charts, on shorter time frame charts. So my sense is this correction that we witnessed in trade yesterday will follow through, and we can see levels of 1700 on the downside. So for me, it's a short trade somewhere between 1860 to about 1870 on the upside. You can look to go short with a stop loss at 1950 with a target of 1700, 1750 on the downside.
Okay, that's Jubilant Foodworks. Aditya advises to go short on this one. But besides that, pull up Trent as well and check what that one is doing. The numbers, I think, looked strong for the third straight quarter. And of course, the pre-opening rates are also indicating an uptick of about 3 to 3.5%. They've been putting up a good show. Remember, yesterday, we had other retail makers from the likes of V-Mart, where bottom line growth was about 40%. V-Mart did register double-digit growth in yesterday's trade. And also D-Mart, of course, on back of the QIP GDP news was up and about. Shubham, coming on trend at current levels, would you take any fresh bet here?
Yes, absolutely. And in fact, the stock has been consolidating for about 10 to 12 days now. And even though the breakout has not happened, but I think the consolidation is mature enough for a breakout to take place, which will be roughly around the level of 600. So I think a preemptive trade can be initiated at the current level because the overall structure is quite positive. And we have seen that the medium-term chart is also indicating that the stock is generally making higher highs. So a long trade can be initiated. I'll recommend a safer stop loss of 575. And on the upside, the target could be somewhere around 640 to 650. And this is a positional trade from a 1 to 1.5 week time perspective.
Okay. Just want a quick comment on whether or not any trade is possible, Aditya, on the likes of some of these housing finance companies, LIC Housing Finance, Indiabulls Housing Finance, which zoomed past 300 in yesterday's session. What would you do with some of these? PNB Housing, any of them?
So there is definitely a short covering rally which can be seen there on Indiabulls Housing Finance, although it's a very volatile stock. But purely from a trader's point of view, I would like to go long on Indiabulls Housing Finance with a target of about 370 to about 400 on the upside. Put a stop loss somewhere between 270 to about 280 on the downside. There's a good volume breakout that we witnessed on Indiabulls Housing Finance. My sense is it will continue probably the short covering rally for a day or two more.
All right. Siddhartha, aside from what we've already discussed, anything that specifically came out of your morning meeting or your new recommendations to your clients in the back of the budget being pushed back and the RBI policy now out of the way as well?
Yeah, so one sector we discussed today morning in detail was the technology sector. Now most of the results are out, and we saw that while there was some kind of deceleration in the core segment, at least the BFSI from the vertical segment and the US as a regional geographical presence. But otherwise, if you see, there was a lot of deal wins that was announced by some of the top the tier 1 companies, and that has led to some kind of overall the revenue growth expectation has gone up. And if you see overall the utilization has improved, that has led to some margin improvement. So overall we believe that on back of some of these segments, the other non-BFSI segments which are driving growth for some of the tier 1 companies, we believe that sector in this current environment where the economic growth is looking challenging, it could be a good defensive bet. And so we believe some of the key players like HCL Tech, which is going a lot on the digital and cloud as a key vertical, that could benefit a lot. Apart from that, Infosys continues to be an outlier in terms of performance delivery compared to some of the others in the IT space. And finally, Tech Mahindra in the again tier 1, which we believe could be a good play on the sector.
Okay, IT as a pack has been in focus, and remember they've been playing a very defensive role whenever we've seen the markets moving down. There's been some sort of buying which is coming into the IT pack. But Siddhartha, I also want to get your view on the pharma space. There are a lot of numbers coming by. Yesterday we had Sun Pharma and Lupin coming out with the numbers. I think they were slightly below than what the street was expecting. Divi's, I think a lot of market experts off late have been giving a buy call on Divi's Laboratories, and the numbers from this player was also pretty much in line with what the street was expecting. Anything that stood out for you, and what's your top pick in the pharma space?
So as you rightly highlighted, there have been some pockets of outperformance within the pharma space. There are some mid-cap names which have come out with good numbers within the pharma space. Overall, the tier 1 or the larger pharma companies have managed to report inline numbers. So that is a good to see that after so long of underperformance, they are being able to match the expectation. And if you look at the overall numbers, the growth has been driven by the rest of the world, or some of the for some of the players, the India business has been contributing. For us, among the top picks for us again is in the pharma space is Dr. Reddy's, followed by Lupin. We also like Divi's, but the valuations are a bit expensive and hence cannot recommend at these levels.
Okay. So Dr. Reddy's and Lupin are Siddharth's top picks in the pharma pack. A couple of your beaten down banking stocks bounced back yesterday post the RBI policy. So one of them was IndianOpen Bank, which was up about 4 to 4.5%. And you also had RBL Bank, which rallied yesterday. On future side, of course, it was primarily a short covering bounce, which came by. But let's check with our techies whether there is any sort of trade which is there for these two stocks. So let me come to you first, Aditya, on IndianOpen Bank. Do you see any trade?
Yes, there was a sharp covering rally, as you mentioned, short covering rally on IndianOpen Bank, and that was backed by volumes. The only good part that I see on IndianOpen Bank is 1200 is acting as a very good support for the stock. It's made almost double bottom at around 1200 odd levels from there. Stock has beautifully bounced back and it's trading above previous week's high. So my sense is this short covering rally might just extend to levels of 1400. It's purely a short covering rally. So if somebody is looking for that, to play that 60 rupees on the upside, they can look to buy the stock at current levels or on opening with a stop loss of somewhere between 1300 and a target of 1400 on the upside.
Okay, and Shubham, coming to you on RBL Bank, would you trade this one after yesterday's bounce?
So the medium-term structure of RBL Bank is not that great, and even though yesterday we might have seen a decent rally, I think the rally might fizzle out around the 340, 345 level. So because this has been one of the underperformers for a very long time, I would not be comfortable on going ahead and buying this one. But I think from the banking space, if we have to choose something, I would still stick to an ICICI Bank, which has been outperforming for a long time now. And even if we look at the structure there, again, it is thriving to make a new higher high. And I think a stop loss can be maintained at 525. We can look for a positional long trade. And the target for ICICI Bank from a positional standpoint will be 575 to 58.
All right. Gentlemen, stay on with us. We're just minutes away from market opening and we tell you all that you need to know to stay ahead and trade today. Hero MotoCorp surpassed analyst estimates in the third quarter, aided by lower tax rates and lower raw material costs.
Among earnings reported after market hours, Trent, Emphasis, IGL and Metropolis reported strong set of numbers.
On the other hand, United Breweries and Johnson Controls saw flat revenue growth, while it was a weak quarter for NMDC.
Aviation stocks in focus after India's domestic air passenger traffic growth saw its first single-digit growth in 4 years.
And Tata Steel, UPL, Britannia and NTPC will be the 4 Nifty companies reporting their earnings today. I also want to take a look at Reliance Industries. The stock now at 1451. There was some increment that happened in the last few days, but in a slew of brokerage reports, now not all that gung-ho on the stock. Siddhartha, a quick word on Reliance Industries and what your call on the stock would be now?
Yeah, Divna, so if you look at the recent results from Reliance bearing the consumer, the retail business, the other segments, so the core business definitely disappointed. Telecom was marginally below the expectation, and the growth was largely on the consumer, the retail businesses. After that, there were news about the stake sale to Saudi Aramco not going through, and that led to some kind of disappointment. There were news again that Saudi Aramco is looking at BPCL as a preferred option to buy rather than looking at Reliance. So the entire story or the hypothesis that they will be able to sell this stake to Saudi, get the money, and the entire deleveraging story is kind of taken a pause in the market. Having said that, if you look at the overall picture, I think they will be able to raise money maybe at a delay, and the core business, which has taken some kind of a slowdown in the performance, will take some time to recover but will improve gradually. So the growth driver continues to remain the telecom and the retail business, which we believe is very positive for the stock. The valuations have become attractive, so we continue to have a positive view with a buy rating on the stock. We believe this correction could be there for some time, but it's a good opportunity for investors to get into Reliance.
Shubham, would you be a buyer of Eicher Motors at 20,500?
So Eicher Motor, I think that there's a short-term rally, even though the long-term trend is still consolidating. But I think after yesterday's move, there should be some more follow-up buying coming in. So just for the 1 or 2 days trade, one can look to go long, and on the upside, the target will be 21,400, and the stop loss can be maintained at 20,100.
Okay, Aditya, what about Bajaj Finance? It was up in about 3% in yesterday's trade when you had other expensive stocks which were down from the likes of HDFC Bank. Would you place your bets here?
Oh, yes. Navneet, the stock continues to make higher highs, higher lows, despite the fact that people continue to say that this is like a DMart one, it's an expensive one. My sense is one can look to go positional long on this for a target of 5,400 to about 5,500 on the upside. There's again another 900, about 1,000 points upside, which is pretty much there on the cards, with a stop loss somewhere between 4,400 to about 4,500.
Has your target on DMart been achieved?
Yes, it did. So 2,200 was the target, and DMart it did achieve 2,200. My sense is it will continue to go long, continue to hold on to the longs. Probably 2,400 is the next target that I'm looking at. It's a strong one. Navneet continues to rally back of 1 week thereafter, and you should continue to hold on to it. It's a portfolio. It's a stock that you should hold on to the portfolio. There's no sign of any weakness yet.
We're running out of time, but quick 10 seconds. Top call for there.
It has to be a McDowell, Devina, with a target of 680 to about 700 on the upside. It's a strong stock. We should definitely look to go long.
Okay, Shubham, what about you? Looking at the pre-opening rates, your top call?
I would go with Pidilite. The structure is positive, so the target will be 1,600 and the stop loss can be maintained at 1,525.
All right. We leave it at that, gentlemen. Shubham, Siddhartha, as well as Aditya, really appreciate all of you joining us this morning with your thoughts ahead of open. 10 seconds left to go, and the pre-open has left us with gains of 13 points in the index on the Nifty, and on the Bank Nifty, about 63 odd points higher. So not bad, at least for the start of the show. So you've got 12,150 as the pre-open indicated, a very flattish start to the indices, and now moving into the red, but no major cuts of sorts. So Sensex also marginally lower. Nifty Bank down 1/3% after that big pop of about 1% in yesterday's session. Coming to the broader market space, what the mid-cap index and the small-cap index is doing, that too is extremely flat. No big gains except for the small-cap index, which is up closer to 0.5%. So slight outperformance, I would say. Coming to the heat map then, and Hero MotoCorp result reaction there, realizations going up just like we saw in the case of Aisha. It's up about 3 odd percent. Z is moved up 1.2%. NTPC, UPL ahead of numbers is up. So you're going to wait and watch as to what they report. Wipro, Britannia also ahead of numbers is up. You've got gains coming in a Maruti, marginal gains. But it's a 50-50 in terms of the advances versus the declines on the index. What's losing out is Tata Motors. It's down 1.5%. Aisha Motors, after that big pop of 4.5% yesterday, is giving back some. It's down about 1.5%. SBI, ICICI Bank, Bajaj Finance, everything is down. Some profit taking on these counters. IOC, Reliance Industries, also the big heavyweight, which is down about 0.5%. Coming to a few stocks on the back of results, to talk about some of them. Metropolis had a decent quarter, a good revenue growth, profits jumped 35%. The stock is moving up about 3.5%. Yesterday saw a dip of 6% in the trade. Aurobindo, inline set of numbers. You had Emphasis also, gross revenue growth of about 5.7%, deal wins of about $189 million. All of that's keeping the stock pretty buoyant in today's session. Housing finance companies, all of the activity, 8.5% for most of them in yesterday's session, and today almost all of them have given back, but not a very hefty quantum. They're down by just about 0.5% to 1% or so. Indiabulls Housing, though, a little more, down about 2%. And some of the banks from the broader market space, which actually obviously are a part of the Nifty Bank as well, that led to the leg up yesterday. RBL is flat, slightly positive. Bank of Baroda and PNB, along with the rest of the Nifty Bank components, are down in today's session. So that's a marginal downtick. But Navneet, what else are you spotting?
A lot of stocks moving around, and lastly, I believe it's a flat opening that we're looking for the broader markets as well. The Nifty mid-cap index right now marginally in the green with the uptick of about 17 points. Just want to highlight a few stocks. Earnings reaction, Trent is up 7% in the opening session itself. So good going. Remember, the numbers were healthy, and it's just not about this quarter. Trent has been posting good set of numbers for last 2 or 3 quarters. Minda Corp is up and about. That's seen gains about 5 to 5.5% in the opening tick. You had Schneider Electric, which reacted positively to its earnings yesterday. It was locked in upper circuit with gains of 20%, and today it's up another 7 to 8%. Then you've got stocks like Akzo Nobel, which is up 4% just in the opening tick. These smaller banks, Lakshmi Vilas Bank up 10%. You've got Corporation Bank gaining about 3% just in the opening tick. So there is some buying interest maybe coming back for all these stocks. But on the losing side, NMDC numbers did not look that great, and hence that negative reaction on the stock. The stock's down about nearly 3% in the opening tick. United Breweries also reacting. That's down 2%. iShares, which was up 4% yesterday, has seen some bit of cool off in today's session, at least in the opening ticks. And you've got stocks like ITD Cementation, HPCL, which are witnessing some bit of downtick. I also want to pull up some result reaction. So IGL, pull up that stock. I think the numbers looked pretty much good and the stocks also reacted positively. Remember, the gas distribution companies have been doing well. And pull up Bata as well. Revenues were up 6% and we did see the margins coming in at 31.8 versus 21%, which was seen in the corresponding quarter. Analysts have been betting on the premiumization theme that the company has been focusing on. Valuations could look expensive, but the stock's been doing pretty well and going from strength to strength.
All right, and we've got a positive market breadth as well. Not a big difference, but 700 stocks advancing, 500 stocks trading in the red. Gautam Shah, founder and chief strategist at Goldilocks Premium Research, is joining us right now on the show. Gautam, good morning to you. It's it's interesting that we have you on a day after 4 continuous days of an up move. We're finally to the end of the week after seeing that big crackdown on Saturday's session. But did that change the dynamics and a lot from a technical standpoint and the recovery post that?
Good morning. Well, I don't think it really changed the dynamics too much because when the Nifty was trading at levels of around 12,300, 12,400, it was looking a little top heavy and it was looking a little exhausted. You might have seen in early January, you had a scenario wherein the top 5 large cap names had turned sideways as the market was trying to get past that 12,400 number. So in a sense, there was some indication that this market is factoring in too much expectation, and when it got disappointed last Saturday, it all just came off. But the manner in which the markets have recovered in the last 4 days, I think that just tells you that for the first time in 2 years, the mid caps have actually bailed out the index. And I think this has been our view for the last couple of months, that the broader markets are looking far, far stronger than the large caps and the mainline indices. And because of the strength that we are seeing in the mid caps, the Nifty is not able to break medium-term support levels so easily. Therefore, I'm not surprised that the market has come back so quickly. But after this run of the last 4 days, the Nifty itself is looking a little exhausted here. So around 12,150, 150, 160, it could see some selling pressure, maybe some range-bound activity for a day or two, which would not be such a bad thing. But irrespective of what the Nifty does, I think our bigger view is that the mid caps and the small caps will continue to run up. And there are more and more pockets, more and more themes, more and more segments within the broader markets, that are participating on a daily basis. So that's going to continue. So on the Nifty itself, I think the upside will remain capped to about 12,400, which is nothing in percentage terms. But if you talk about the mid-cap index, our bigger target of 20,000 is very much on. So we are looking at a good 2,000 to 2,000 point upside even from these levels.
12,000 as a cap on the Nifty is something that you're projecting for the immediate near term? Any longer term setup where you can give us a target on the index for a slightly longer period of time?
Yes, I wish I could give you longer targets. In the last couple of years, we've been very bullish on the Nifty every time we've interacted on this medium. But now you've come to a scenario wherein the longer term charts of the Nifty give you an indication that 2020 is going to be a sort of a dull year for the mainland indices. So it will keep moving back and forth in this 11,800 on the downside and 12,400 on the upside. But our bigger picture target for a very long time has been about 13,000. So at some point of time this year, you should see the Nifty testing a level of 13,000. But that again is nothing in percentage terms. You are just talking about 6-7% upside, whereas the broader markets are going to give you 2x or 3x return.
Okay. Some encouraging views coming in from Gautam. Let's see if the bailout that we've seen from the broader markets this time around continues for the remainder of the year as well or not. Hi Gautam, good morning. I want to talk about the Nifty Bank as well, the banking stocks. Though yesterday, of course, there was some bit of outperformance, but if one were to look at the returns on year-to-date basis, Bank Nifty has actually underperformed Nifty. I think it's down somewhere about 3%. Do you expect this sort of trend to continue in the near term?
That's exactly the problem, and this is exactly what we identified early in the month of January when we noticed that the Bank Nifty was not leading the Nifty higher. in the last couple of years, every time the Nifty is moved higher, it's always the top 3-4 banking stocks that has helped it, drive to those levels. This has not happened for the first time in a couple of years. And again, if you look at the relative strength charts, you have an indication that the Bank Nifty underperformance has started, and I don't think it's going to end in a hurry. So even though yesterday the Bank Nifty did well in comparison to the Nifty, I think looking at the setup of some of the top 3-4 names, I feel that the Bank Nifty is going to be range bound, and some of the underperformers of the last 6 months, like Pharma, auto, metals, I think they are likely to do well and they are likely to contribute to the Nifty gains. So Bank Nifty, I don't think is a trade. It will stay in a large range around 31,500, 600. There is a lot of resistance. At the same time, around 29,500, there's a lot of support. So broadly, it's going to be range bound, and you have to really trade the trading range. Also, in today's market, I think it's important to be stock specific, because on one hand, you have an IndusInd Bank which is near 52-week lows, and on the other hand, you have an ICICI and an HDFC which is trading at 52-week highs. So 2020 is all about being stock specific, and if you are in the right stocks, if you are in the right themes, only then can you outperform the market.
You mentioned, Gautam, on autos and metals. Of course, we've seen the metals outperforming on fundamental basis as well, and globally also prices inching higher. What within the metals pack are you positive on? Is it the ferrous or the non-ferrous space?
Well, I think it would be the ferrous space. Unfortunately, I cannot talk about specific stocks. But my bigger picture view has been, the fact that the metals index lost 50% in value in the last couple of years. And because this sector and this theme tends to be cyclical, I think you got an indication a month and a half back that a new major bull market could be kicking off in the metal space. And the manner in which some of the top names, have run up, like Tata Steel, JSW Steel, JSPL, I think that gives me the confidence that there is far more upside from current levels. Also, with the correction of the last 5 or 6 sessions, many of these metal stocks have come back close to support levels. And I believe that the next phase of the upside is going to start from current levels. So the risk reward is very lucrative. And also you need to understand that the damage was so much in the last couple of years that the scope for recovery is very large, because people tend to see how much it has gone up from the lows. We make this point, look at the kind of damage it has seen from the highs, and that will give you the confidence, to buy even at these levels.
Okay. Gautam, any change in trend? Obviously, we've been seeing a lot of these real estate stocks. Any sort of news gets all of these counters activated. Do you feel that there is more scope for upside, leaving fundamentals aside, in some of these mid-tier names? And what kind of names within the real estate pack are you looking at?
Well, that's a good point. I think the price action is clearly suggesting that there is something positive happening behind the scenes. Every time in the last 1.5 years, real estate has come back, it has faced resistance, and it has turned around to go on to make lower lows. So that's really been the trend, and people got frustrated because it was a trap so many times. But this recovery of the last 6 weeks in top real estate stocks looks genuine, looks reliable. And I'm of the opinion that most of the negatives are already into the price. So as and when you get some minor positives also, many of these stocks are running up really well. And they are coming back after a foundation which was laid for almost 6 to 9 months. So I think this bull market in the real estate stocks is here to stay. And I'm very confident that news flow will follow. So hopefully over the next few weeks and many months, you will have better news flow in the sector, which will help a lot of fundamental analysts justify the kind of price action that we are seeing right now. And I do believe that this is still at a nascent stage. Another sector which is pretty much in sync with what real estate has done is pharma. After a 50% drop in the last 2.5 years, many top pharma stocks are coming back really strongly. And I'm looking at a 25% upside on the pharma index from current levels. So our best bets in the market right now are the underperformers. So mid caps, IT, pharma, auto, metals. These are the top 4 or 5 themes which I think will do very well over the next 6 months.
Sure, indeed. And we are already seeing green shoots in all of these names that you just highlighted. Gautam, thank you very much for taking up the time and joining us this morning.
Thank you.
Moving away from that, the RBI's decision to offer banks funds for 1 and 3 years at repo rate is a move aimed at managing yields, says Neeraj Gambhir, head of Treasury and Markets at Axis Bank. Speaking to Ira Duggal, Gambhir says it's also aimed at narrowing the gap between shorter term and long term debt. Listen in.
It's a bit of a nomenclature to my mind. I think effectively what we're basically trying to say is that the term premium of money in the bond market, whether it's a government bond market or whether it's a corporate bond market, actually comes down and reflects the fact that there is a far more longer and sustained commitment to be accommodative as far as the liquidity is concerned and as far as the interest rate policy is concerned, and to make sure that the that is kind of getting factored in. I would say that the bond market in India has had to go through a somewhat of a difficult period in the recent past, particularly in the corporate bond side, where you saw a spate of defaults from AAA and AA rated entities, which caused a bit of a confidence crisis in the bond market, and that sort of led to a far wider spreads for, let's say, AA or AA plus rated bonds. Now with these measures, if we see those spreads tightening, then I think these measures would have sort of achieved their objective, which is basically to lower the cost of funding for, let's say, not the AAA, not the PSU, but AA or AA plus rated entities.
Okay, so I'll come back to Operation Twist in a minute, but since LTRO is what was announced today, can you help us understand how this will actually play out through the market?
So we need to see the detail because we will wait for the final circulars to be issued for all these changes in the liquidity management framework that Reserve Bank has brought in. But at this point in time, the understanding is that they will be conducting auctions. I think February 15th is the date in which they will invite bids for banks to borrow money for a longer period of time, say 1 year, 2 year, 3 year, against the collateral of government securities. This money is going to be available at 5.15%, which is the policy rate. So the way it sort of incentivizes holding of longer term bonds is that, let's say you have a 2 year or a 3 year bond which is yielding you, say, about 5.75 or 5.90. You put it in this repo and you get longer term funding. So on a matched basis, you have a spread which is locked in, and that spread sort of encourages you to buy more of these short dated bonds. The only caveat here is that there is a limitation to how much amount they are willing to inject by way of this, and that's 1 lakh crore. So that's going to put some kind of a constraint on how much bond bids can be there in the market. But effectively, this should help bring down the shorter end of the government bond yield curve, and it should basically make sure that there is more incentive to buy corporate paper in those maturities.
So the rate signal it sends is that perhaps there is no reason for rates in the 1 year, 3 year bucket to be very much above repo, is it not? Is that not the rate signal?
Yeah. So it's basically taking out the term premium, right? Yeah. It's basically compressing the term premium. See, the thing is that we normally think of a policy intervention in the rate space as changing the overnight rate, right?
Yeah.
But the issue here is not the overnight rate. The overnight rate is already quite low. I mean, there is obviously some more scope for the policy rates to be reduced. The issue is that the term premium in the market is fairly high at this point in time. The market believes that these rates are not sustainable for longer, and there is more demand for what we basically say is the risk premium for the tenor. And that's what the central bank is trying to act upon. In that sense, these interventions, whether you call it LTRO or whether you look at Operation Twist, they're basically taking a leaf out of what the developed economy central banks did in the aftermath of global financial crisis. I think almost everyone sort of started doing some kind of the other operation to bring down the long-term term premium in the market.
Well, On the similar lines and on the measures that the RBI had taken yesterday, it has provided an incentive to auto, home and MSME lenders in yesterday's budget. The move is aimed at boosting the loan book. One such player which has a large exposure to the auto sector loans is Shriram Transport Finance. Mr. Umesh Revankar, the MD and CEO of the company, is joining us on the phone line right now. Mr. Revankar, thanks very much for taking out the time. Obviously, this is a welcome move from the governor, but what's your initial take on what this could do for the very short-term disbursals and how this would translate into the pickup of disbursements at your end for auto loans?
See, right now there has been expectation that the pre-buying before BS6 rolls in, there should be strong pre-buying demand. But January somehow it did not happen. We expect February. There are good inquiries, but conversion levels are still low. I feel the demand in February and March should be reasonably high for a new vehicle disbursement. But as far as the used vehicle is concerned, there is a continuous good demand because rural economy is doing well, mainly because of higher agri production and big lot of activities happening, both because of Kharif and Rabi crop. The rural demand for used vehicle is quite good. So I feel any more liquidity being available to this industry by through bank or through NBFC will definitely translate into bigger credit demand.
So I just want to understand from you, does this move directly impact you in any way?
I think it should move through only bank because I don't think it will move directly to NBFC. So bank can either do a term loan directly on the balance sheet for on-lending purpose. And now, since on-lending by the NBFCs are allowed under the priority sector, if it is smaller units within priority sector definition, I think that will definitely have some transmission from the bank to the NBFC. And a company like us who are into lending small operators should get bigger allocation.
And will that impact cost of funding also in a positive manner?
Yeah, see, whenever there is a direct transmission, cost of funds will definitely be better. And also, since the liquidity is high, there will be some pressure on the bank to reduce their lending rates. And however, 135 basis point reduction is not totally transmitted till now. I think there is a scope for reduction in the lending rates.
Okay. Any idea, if you were to probably take, back of hand calculation as to how much of an incremental upside do you see coming in from this measure, whether it be regards to the cost of funds, whether it be regards to the incremental offtake of auto loans at your end? Could you just give us some of those, blueprint numbers?
From our end, I do see, because we do see this quarter to be bigger compared to the previous quarter. We should be growing at least 30% larger than the previous quarter. That is the estimation we have. And the funds being available at a lower rate, we would be able to pass the benefit to the customer at lower rate and translate that into better growth.
Okay, got that. Mr. Revankar, thank you so very much for joining us this morning. Appreciate you taking out the time.
Yeah, thank you.
All right, so an easier transmission, the rates coming off from banks to NBFCs, and therefore them being able to pass it on to customers. That's probably the bigger take from that. We're going to take a very short break on this note, but coming up, we discuss the results of Metropolis Healthcare with Managing Director Ameera Shah and about the metal slump with Rakesh Arora of Go India Advisors.